Welcome to today's episode of a DeFi Dojo podcast. As always, I'm joined by my co-host Mara from the DeFi Dojo, and today there's a bunch of stuff going on. The markets are kind of going up. That's fun. Maybe some big things are launching soon. I was just staring at Barachain. I know you've been actually interested in this longer than I have, but I'm finally. You were just telling me this, which is such a silly thing to say. Is it gayed up for Bara, you were saying?
Yeah, I think that was like a funny term that was getting thrown around, going gay for Bara.
There we go.
But yeah, I
Yeah.
mean, Barachain's fun. I think we still have a lot to see, a lot to learn. I think we're starting, we've been getting the vibes for a long time in terms of like these crazy parties that they've been throwing, in terms of like the tokenomics and how they're kind of structuring their ecosystem. There are so many projects building on Bara, and now we're finally actually getting some of the like information on kind of like the token economics and the initial distributions. It feels like we're getting pretty close. It feels like we're getting pretty close to this ecosystem hopefully starting to kick off, which will be exciting.
I did not realize how many things were built on Bara.
Oh yeah. Yeah. Hundreds, I think.
Holy cow. That's like, that is a ton. Some of these I know, Abracadabra, it's a big throwback to Daniele Sesta, his protocol. I think that's the same one, at least. It says lending and bridging, so I'm assuming it is. And he was also always kind of aligned with the OM team, and I think the OM team is aligned with the Barachain team. Holy smokes, this is great. So one of the things that I saw yesterday, I don't know if you saw this, was that, maybe it was not yesterday. Was it yesterday? October 9th. No, it was 6 days ago. I'm just slower than most people. So a week ago, that Barachain released this video about the incentives programs. I guess that's one way of putting it, with RFB, RFA, and Boyko, which I guess is Royko with a B. And so I think we should talk about this, because this was the first thing that really got me like hyped about Barachain, because I am an incentives guy. When I see people say and commit to actually emitting real live tokens that you can go and realize your yield on, then I get really bulled up. So, have you seen this? Have you seen this proposal?
Yeah, I mean, it seems great. It seems like this is going to be the thing that kind of is the final sign of them actually launching. It is bullish to see that they're like going to try to pull in like TVL from other ecosystems. They're really going to try to like go off with a bang. I mean, I think that's kind of needed for proof of liquidity, to really kind of like work. You can't start with like $1 million of TVL on the whole chain and 100 ecosystem apps. I think that they're going to try to bring the fire, have some serious TVL in their day one. They're having this interesting system called Boyko. Do you think we should start there, or which of these three interesting things should we talk
there's
about?
There's Boyko, there's RFA, and RFC. So RFA is a thing that most protocols are probably excited about. RFA, as far as I understand, is that if you are aligned with Barachain as a protocol, then they will give you effectively like a grant. And 70% of that is going to go to, I think they say at least 70% has to go back to the users of your protocol post-launch. So this is going to be like big incentive packages, just imagine like getting extra Bara tokens or whatever it might be for liquidity provision, for lending, for whatever activities you do on protocols, for buying NFTs or holding them or staking them or whatever it is. And then 10% to reward testnet users. So imagine all of that gigantic list of protocols. 10% of the we'll call them grants, but it's just the RFA thing. 10% has to go to retroactively incentivizing testnet users. So like kind of like an additional airdrop boost. And then I think like they said up to 20% can go to treasury. I mean, if you do the math there, it doesn't, those numbers kind of seem weird. It seems like you could only possibly do 20, like a maximum of 20%. So I guess that's why they say up to. And so that's RFA in a nutshell, as far as I understand it. And that already gets me excited, because that means a lot of what I am considering grant money, they don't call it grants, but that's what I'm calling them. A lot of grant money going towards Bara-aligned protocols that have run testnets. So like one thing that obviously jumped out to me was Dolomites. I saw their testnet, and I know them from Optimism and Arbitrum. But the next thing that got me excited was Boyko, because This is going to be a really interesting mechanism, which is what you were just talking about, which is a multi-chain vampire attack, is one way to put it. Where, as far as I understand, the way it's going to work is there will be smart contracts deployed on the people who were awarded the Boyko whatever, like they were accepted by the Boyko program. There'll be smart contracts for those protocols that allow you to accept TVL, whether it be like Lent, ETH, or whatever, or Liquidity. You can take TVL on the chains they already exist on. So take TVL on Arbitrum, on Optimism, lend your ETH on Dolomite, on Optimism, provide liquidity on maybe Abracadabra on Arbitrum or something. And then you've said you want this TVL to participate in Boyko. So you want that to go onto Barachain when Barachain launches. And when Barachain launches, that TVL will automatically, through smart contract, not through a multi-sig like Blast, will automatically go to Barachain. And you will be incentivized to do that. So they're incentivizing this sort of like interesting vampire attack mechanism. That's how I understand Boyko.
Yeah, I think it's all really exciting. It kind of fits into what I said maybe a couple shows ago about, my thesis for getting Barachain exposure. This system of how they're going to be distributing tokens to partner protocols, and then those will be distributed to users, both of the testnet, but of the protocol itself. Really fits with kind of what I've been hearing about potential airdrops coming through Ambient, the DEX that's on Scroll, coming through your LRT, which is like this LRT, which is aligned with Union, and then of course through Dolomite as well. So maybe there's some other kind of interesting protocols on this list. I think a lot of what's going to be happening on Barachain is actually going to be Barachain native, right? I think there's a big emphasis on that. So there's a lot of new protocols, both actual new things that are like, new primitives or new ideas for protocols or twists on stuff. I think there probably will also be quite a few forks, people who are forking Aave and Compound and the normal dexes and stuff that we see on different chains. But I think that within all of these different protocols, there's a very kind of high likelihood that we actually see some kind of new and interesting stuff that can fit into proof of liquidity, since there is this kind of new paradigm that they've shifted on how incentives are pushed out through the ecosystem. And this is, I think, an ecosystem, Stephen, that really should make you excited, right? This is a DeFi forward ecosystem. They are day one incentives, day one ecosystem, day one, the ability to kind of like have folks like ourselves, the DeFi Dojo, who's going to be a validator on Barachain, helping to make decisions and directing kind of incentives to the most important pools and the most important things, and kind of grow out the ecosystem. So I'm excited. It definitely feels like we're picking up momentum, and launch could be soon. I haven't heard any specifics on like a date yet, but maybe we're a month or so out. That'd be definitely very exciting, and could be the kind of thing that also, if we're seeing bullish conditions, kicks off the next kind of catalyst, the next kind of move. If there's always been, when we've had these big movements with airdrops, for example, like this earlier this year, or was it the end of last year? Jito had their big airdrop. If you had one SOL deposited, you got like almost $10,000 in airdrop. That then started a massive amount of airdrops going out to different communities. We've also seen other things where there's been, new farming campaigns or new launches that have really started kind of bullish conditions. And I'm optimistic that Barachain could be that catalyst this time around.
Well, you've done a bit of this testnet playing with. I've like barely played with this. I got some Bara on the testnet faucet. Luckily Rabby integrates with Barachain testnet really easily. So I went over to the faucet website, got some Bara. I threw it into Dolomite. I think I borrowed like what's the stablecoin, Honey, against it.
Yeah, Honey.
And that was the extent of my testnet usage. But yeah, like just go play with the thing. Just go play with the testnet, and it's really the best way to potentially qualify for all these things. And remember, you're not just farming the Barachain airdrop. If all of these things are new protocols, and you can find some of the new protocols that like you enjoy playing with, you think, man, that's a fun protocol, that's a really great user experience, or this UI is really, really good, it's going to be exciting. then go play with it on testnet if you can, because then there'll be governance tokens from that protocol that may airdrop to you. So really, the saying is, when you're airdrop farming, touch everything, right? So that's kind of my assumption. Is there any way to like get more faucet tokens? Is that the only way to get these the funds you need to play with this?
I think there's multiple faucets, but it is, one of these like immensely popular things where I can't remember the real statistic, but there are millions of people, using this testnet, and the faucets are pretty competitive. So I think there is some rate limiting going on. There is some competition for getting, more and more and more of these testnet tokens. So, I completely agree. I think, spending some time learning the ecosystem, trying out, these different dApps and stuff like that makes a ton of sense. But being super competitive and trying to like hoard testnet tokens probably is a waste of your time. So, you gotta find the happy balance between those things.
Oh yeah, I wouldn't say hoard them. I would say get as many as you can to go play with stuff, because otherwise you're using hyper little fractional pieces of tokens, and to me those numbers just aren't as exciting as like whole numbers.
Sure, makes sense.
Now I saw Anzen on here, and I was going to talk about Anzen today. So I like Anzen. I like Anzen. I haven't used Anzen. And I wanted to mention this because from a real world assets perspective, it's one of the most interesting stablecoins out there. It is, and by the way, they're not like a sponsor or anything. I'm not talking about them just because like I just like them. I think they're cool. I think they solve one of the problems that few, if any, other stablecoins have solved, which is scalability in a variety of different market conditions. Like treasury-backed stablecoins are great when the treasury yield is high, but that is fully dependent upon interest rates. If interest rates go down, if we see a bunch of interest rate cuts, then those stablecoins backed by treasury bill yields will also go down and be less interesting. Anzen has a stablecoin, USDZ, that is backed by, and I always get the word wrong here, a credit portfolio, but there's like credit notes, I think is the word there. Let me see if I can find it. Yeah, I mean, let me show you guys. So basically, it is backed by CDOs. So if you're familiar with CDOs, collateralized debt obligations, it just means they are lending to people like BlackRock, like other people, trying to find the actual names here. So here's BlackRock, here's an institutional blended note, discount receivables, SMB financing. So effectively, like well-vetted debtors, another word, yeah. Well-vetted debtors who are borrowing real money and paying an APY on that to get those loans. And you can sort of see what kind of loans these are, but they're all real world. They're the financial loans you would participate in real life if you were building a CDO portfolio. And so what they've done is they've created these as the backing for their stablecoin USDZ, and therefore USDZ has a weighted APY of like almost 10%. Now, as a stablecoin yield, that's insane, especially because it's not coming from any, what I would consider traditional DeFi Ponzi-nomics like UST, or, it's not minting its own token to create that APY. So that does get me excited. And I will say the way I'm thinking about this is not really like a stablecoin as much as it is exposure to CDOs. Like, I'm not expecting it to always go up and to the right. I'm not expecting it to behave like a stablecoin. I'm saying if I wanted on-chain exposure to CDO investments that's going to be really stable, but has the potential of sometimes going down, this is it. This is great because it's composable. You could literally take USDZ, hopefully sometime in the future, collateralize it, loop it, leverage it, provide liquidity for it, and I don't know. That definitely that is cool to me. This is where DeFi I think makes sense.
I think that's a great point, especially about like what these things are. Like we've seen Athena this cycle be massive. It's marketing itself as a stablecoin. In reality, it's not really a stablecoin. It's more like a vault token. It is like a share in like a strategy that's being run with collateralizing, staked ETH and then shorting a proportional amount of ETH against it. and, you know, picking up the carry of the staking yield plus like the funding rate, right? Well, this is kind of similar, right? This is similar to Athena. I put it kind of in that similar kind of bracket where it is running a strategy underneath, as you just broke down. You know, it's lending out the funds, it's earning a real APY on top of that, the same way like Athena is earning a real APY on top of it. And then the beauty of both of these things is they take real cold hard yield and then they throw DeFi Ponzonomics on top of it. Then you can go and take your USDZ, take it over to Aerodrome and get an additional, I don't know, what is it? It's like 15 or something
last time I checked, it was like low double digit.
So like that's great. I think, you know, we've seen this kind of next gen in, you know, like maybe stablecoins, loose word, vault tokens, real world assets coming on chain. And I really like it. You know, I've always been a big fan of like RWA projects. I had a lot of hope in Frax and like their ability to bring some interesting yields on chain with Frax bonds, you know, MakerDAO, with SDAI. But I think that these, honestly, as you said, kind of have maybe more scalability, right? Like, it is really important to go and look at the risks, to think of the risks of Athena, to think of the risks of Anzen, but you are being compensated for it, right? Like, you know, you are really earning some kind of pretty juicy yields. And if you can go and kind of take a look at, you know, what are the different things they're lending out to, whether you think that that is, you know, high quality, you know, debt or people that you're lending out to, then I think it's great. I think it makes a ton of sense. I was also talking to Plume recently. I think where, you know, that also fits into this like next generation of RWAs. They're going to be this like L2 where they're going to have a lot of RWAs issued. They're going to make it easier for folks to issue different RWAs, things like, you know, Anzen, other types of like either treasury backed or corporate debt backed or, you know, corporate bonds. And basically be an L2, which really kind of focuses on this stuff and really focuses also on having a DeFi ecosystem built around it. So I'm, you know, continue to be excited about the RWA space. I think that this, you know, has a huge amount of opportunity, bring, you know, interesting yields on chain, put a layer of, you know, DeFi Ponzonomic, high inflation tokens on top, and farmers like ourselves could do amazingly well from them.
Yeah, definitely. So one thing I want to ask you is Frax RWA, or like specifically Frax bonds. What were they backed by? They didn't do that well, even though they're really interesting. So like if you bought them on Curve, you know, if you're buying like $1 worth, because the price impact on buying these things was insanely high, you could get something like a 12% annualized yield, which was really good. Because they were like depegged for whatever reason. The actual like minting yield was somewhere around 5%. But do you know what were they just backed by treasury bills or do you know how that worked?
Yeah, so these were like different duration of buying treasury yield, right? So like if you were basically like spending your Frax and then they were going and buying a treasury note, could be different durations. I think there was like a 6-month, a 1 year, a 5 year, maybe other durations as well. And then it kind of worked like PT, where you got like the receipt that you had was maturing over time. And at the end of the duration, you would receive all of your principal back plus all of the yield that you had earned. Now, you kind of know where the endpoint is of what the token values is, but you don't know the market rate over time. And that fluctuates massively, kind of like what you're saying. So you could buy these things and you could buy them under peg or under their kind of like inherent value, essentially. The same way you can do that with PTs sometimes ish. Maybe that analogy doesn't quite work. But like, you know where it's ending up, but you don't know what the true value is today, right? And so I think like a lot of the treasury bills they bought were at like 5%. And you could see if some of these things were depegged, they were trading at, as you said, like, you know, such a massive rate lower, because people, you know, wanted to exit them early or they wanted liquidity or whatever it was. And I think that is kind of like the challenge with a lot of all of these RWAs is there is this like timing mismatch. I even think something like Anzen could experience this, where, you know, we see a bank run, people get skittish, people get scared. This happens all the time in DeFi. And because these products are kind of connected into the TradFi system, they're dealing with a different, you know, like time frames, right? If you buy a 5-year bond, you probably can sell it at any price, but you can't sell it at its like intrinsic value at any time. The same thing
Right.
with corporate debt. You can probably trade out of corporate debt, but you're going to take a loss unless you hold a maturity, right? So, um, I think that's probably going to be one of the main pain points that all of these RWA products experience. Plume is trying to solve that by having like really deep liquidity, really deep lending, lots of use cases for them. So that could be one interesting kind of solution for this, but I think that timing mismatch will always be there where the degens want instant liquidity now and are willing to dump at a loss. And like TradFi wheels just like work slower and have strict rules about like, you can't just exit at the drop of a hat kind of thing.
Right. And
The same way you
this
can't trade
tends
all
to
the time.
favor, or it's, I don't want to say symbiotic because that's not exactly the right term, because if degens are taking a loss to go play with other stuff, it's almost symbiotic because a protocol is providing the optionality of entering and exiting a fixed rate, fixed date bond whenever they want. So by having these things be liquid, even though they have a fixed rate, fixed date yield, people can sell, as you said, sort of like under peg or at an immediate loss, and then other investors can pick these things up for an even higher fixed rate, fixed date yield. And I did like that. I thought that was a really cool portion of the Frax bond mechanism. So kind of speaking on this stuff, I was looking at Syrup because Maple Finance has been like a big kind of thing in this space for a while. I think if you've ever been a USDC or stablecoin farmer, especially during the last bear market, you probably have at least looked at Maple Finance. It's like lending to these big debtors who are like institutional and are vetted and blah, 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 go through KYC process. I mean, I'm trying to think of like the mainstays. You have Wintermute, you have probably A16Z. There are probably a couple other ones that you guys would know about. Syrup is a more DeFi protocol built, I don't know if it's built on top of or just built in partnership with Maple. Where effectively, as far as I understand, maybe I'm not getting this exactly right, they are lending, like they're doing, it's kind of like the Fractal vault from Sommelier. Like they're doing an index of lending that is optimized for yield. And so currently, like right now, they're offering a 20% APR on lending stablecoins. Now, I would love for this to be more like Anzen, where like you could mint a stablecoin against your lent position, your loan, but that doesn't exist yet. So hopefully it will one day exist, because I just like that idea of composable positions. We'll call them CDPs, composable debt positions or composable loan positions.
So basically, just so I understand this, with Maple, you can only choose one like lender that you're, or one
Well,
borrower that
you
you're
could lend
lending
to
out
a
to.
bunch, but
Yeah, right. But
you
like,
right.
it wasn't automatically rolling over. This is one where you kind of like, it automatically optimizes where the best yield is. And then I would imagine it rolls over between the different positions as well. But yeah, having a liquid representation of this would be sweet. Like being able to go and lever this up or being able to go provide liquidity on it. I am also a big fan of composability. I think like DeFi's ability to like build on top of itself is one of its biggest features. Plus, it makes it way more interesting for us farmers when you can get, what looks like a 10% yield here if you lock up your tokens or something like that. And
Yeah, so
then,
let me explain how this works. So the
okay,
lockup, as far as I understand, it does not affect the base yield. So the base yield is going to be, it says 11% for USDT, 10% for USDC, like that. You're going to get that no matter what you do. I think, don't quote me on that. But the additional yield comes from drips. And drips are kind of like points. If you're familiar with like Gearbox's stimmies, it's kind of like that, where you're not farming points for an airdrop in the indefinite future. It's every cycle or epoch, these drips are like, they calculate how many drips there were and they distribute a certain amount of Syrup token. Syrup, I think, is a governance token of Syrup. And so the average boosted APY from the Syrup distributed from drips, which just is a confusing thing to say, is an additional 10%. So you can either like commit to no lockup, a 3-month lockup, or a 6-month lockup. And from the people that I talked to in the dojo, they said that with no commitment, no lockup, they got an additional 5 to 6% APR. And so I'm imagining that the average is probably a little bit more biased towards the 6-month. It's not like smack dab in the middle of 3-month, because I again, it's my feeling is that there are a lot of institutional investors who are totally fine with a 6-month lockup if they're getting an additional 11-12% boost, lending to an index of Maple debtors. So that's kind of where that additional yield comes from. So it's like a 10% quote unquote real yield, or yield that you're getting from borrowers, and then this average 10% from how long you've committed your capital to.
Right. So if they're just having a liquid representation of this, which is just that base yield plus the like no commit 1x strips, that would be an awesome, asset to go do stuff with.
That's what I'm
And then
saying.
people can go,
I would leverage that
yeah,
10x on Morpho or something
yeah,
fluid.
yeah. It's super interesting. Speaking of like Morpho and some of these different leverage stuff, we did see an interesting hack that happened on Morpho Blue with a PAX G. So this is a dollar denominated. Sorry, this is a PAX G is what,
Gold
gold. It's a
denominated,
liquid
right?
representation. Yeah, liquid representation of gold. And this was a market where people could lever up their gold. So you were collateralizing your gold token, and then you were borrowing USDC dollars against it. And then you could just do that. You could just get liquidity on your gold, or you could lever it up. Which I know for the gold bugs out there like yourself, Stephen, is kind of an interesting use case that a lot of folks probably didn't have access to before. But yeah, this hack seems to have been related to a Oracle. There was like a mispricing essentially, just due to kind of like the number of decimals that were being used, unfortunately, and it was pricing gold at 2.6 trillion
Instead of
instead of
2.6K.
like instead of 2.6K. Right, exactly. So it looks like there was a loss here, like 230,000. In some ways, I think that this is a challenge for Morpho, because, Morpho is permissionless, so anyone can go set up a market, right? People can make mistakes if you're not kind of communicating with a Morpho team, if everything's not being set up in the proper way. I think, that is a challenge because end users are not maybe nuanced enough to know like this is a good vault, this is a bad vault. On the other hand, I really appreciate what Morpho does. Like having all this stuff being permissionless, I mean, like does have the advantage that you don't have to wait for a long time for something to get listed on Aave. It means that there can be higher risk herd stuff that is listed on Morpho Blue. So I don't know. There's been this back and forth beef between Morpho and Aave for such a long time, and they are really angry and really serious about this. I'm kind of curious to hear where you land on this stuff, Stephen. Like, what do you think about this exploit? What do you think about the Aave Morpho beef, permissionless versus permissioned? You're muted.
Yeah. I was saying, yeah, I'll give my philosophical overview of how I conceptualize Morpho type protocols versus Aave type protocols, but you have followed the drama a little bit more, so actually I wouldn't mind hearing from you what's going on over there with like Chaos Labs and Gauntlet and Morpho versus Aave. I kind of understand the background. A lot of people are talking about it, but so for me, the benefit of Morpho, permissionlessness, you get to choose the LTV people are borrowing at. You effectively set the risk profiles. As far as I understand, you can also kind of determine the interest rate curve, which is really useful if you know exactly what you're looking for from a lending market. And it's a very trusted platform. So that's great. And you can also choose your Oracle, which is cool. So that was an issue with PAX G, but for other protocols, like I think borrowing and lending against PTSUSDE, they use an Oracle where the debt and credit, or the debt and collateral, are both 1-to-1 hardcode pegged to DAI, which you might think that's maybe a risk. Well, what it means is you can't get liquidated from any price action on the Pendle AMM for that market, and I like that as a leverager. That makes me feel way more secure. And so the fact that they launched that and they got a bunch of seeded liquidity, like that is a phenomenal use case of Morpho. And I think, it's clearly been working for them because, it's constantly borrowed, maxed out. And so that's been really good. I think SUSDE has had some really great markets over there and a lot of success over there. There are some markets for Renzo that had a lot of success over there. The pain point, though, is that if you ever wanted to change the LTV, you have to spin up a new market and see new liquidity. And that is really frustrating. And also, similarly to Silo, another protocol that I love, the liquidity crunch of lenders, or the bottleneck of getting lent assets is very real. So this is where protocols like Aave, like Dolomite, like Compound shine, because they have a centralized pool of assets you can borrow from. And so, if there's a million, or if you're with Aave and Compound and Dolomite, if there's 100 million or $1 billion of lent ETH there, then you can collateralize any of the assets they support and then borrow from that gigantic pool of ETH. And as a rule of thumb, or typically, what you'll see is a lower interest rate on that pool, as opposed to siloed pools or isolated pools, which tend to have a much more volatile interest rate because it's a smaller amount of capital going to a very specific collateral type, and just less to borrow. So definitely strengths and weaknesses, but now let's get into the drama. Why is Aave?
Yeah.
Didn't Aave issue an edict that was like, if you work with Morpho or Gauntlet in any capacity, you're going to be considered a bad actor? Like some.
Yeah, I just sent it to you. You can pull it up. We could take a look
I'll pull
at
it up.
But my just to kind of finish the thought that you were having there, I really see them as being very different, right? Like I'm actually a bigger user of Aave. I have some massive Aave positions that I've had open for quite a long time. I jump in and out of Morpho pools when there is something like interesting going on, but like I really appreciate the stability of Aave, right? Like I appreciate like there's tends to be lower rates. It tends to be kind of more dependable that like, the rates I'm entering today, the like LTVs I'm using today are not going to shift. And part of that's because there is this like massive setup that they have where like risks are considered and like liquidity is thought through and like what are the good assets to be included. In some ways that's great, right? In some ways it's great because you can kind of use Aave and feel pretty safe. If you're going to use Morpho, it feels a little bit more like the Wild West, where like, anyone can go spin up any market at any time. We're not, the onus is more on you to go and look at which oracle is being used, the quality of the asset, if you're lending it out, or like participating in one of their earn products, like what LTVs, right? There's a lot more optionality to it, and that is like both a good and a bad thing.
But yeah, I was gonna say
yeah,
the difference is that with these isolated pools, you're only exposed to one collateral, as opposed to the Aave, Compound, Dolomite, etc., like means of borrow lend, which is you're exposed to every collateral they offer.
right. And that's like kind of where we get into this like drama between Gauntlet and Mev Capital and ACI. We have these kind of like stewards of Aave, right? We have these different governance participants. We have these different risk folks who are looking at all this stuff, thinking about this, right? Because they don't want to onboard some asset that is then going to provoke, have some sort of systemic risk to Aave, right? We saw that with like the CRV token and Mitch, borrowing and having massive amounts of leverage on Aave V2. That was a systemic risk, and they don't want those kind of situations to be happening again. So you have these different kind of participants, and it has definitely gotten a bit tribal, right? Like it has definitely gotten into a situation where you had some kind of stalwarts of the Aave community kind of being pushed out almost. So just as a reminder for folks, Morpho V1 or whatever that thing was called was basically like a P2P matching or optimizer built on top of Aave. And there was actually quite a close relationship, right? Like there was actually quite a lot of like collaboration where Morpho had built on top of them. They were providing a service that actually a lot of folks were using because they could get better rates using the Morpho, like P2P matching on top of Aave. I know I was a big user of it at one point. Then they released their new project, which we've been talking a lot about, which is Morpho Blue, which are these siloed markets where, as we've been saying, there's two different assets, one that's collateral, one that's being borrowed against. There's different oracles. There's all these different parameters that can be set. And there are different, kind of like, I think that they're not called operators. Anyway, there's a name for the people that are kind of like setting up these different vaults and then like lending towards them. Gauntlet, for a very long time, had been one of the major risk managers, folks who are kind of like thinking about what assets should be on Aave, what amount of limit should be there. And they decided to be, one of the vault creators on Morpho Blue. And that is also true of Mev Capital as well. I've been very involved with Aave, was interested in kind of this new launch of Morpho Blue. And a lot of the kind of main folks at Aave really didn't like it. Mark Zeller, kind of who leads up ACI, is one of the major people who got really pissed off. And a lot of the Aave folks are French. A lot of the Morpho folks are French. And what I have learned is that French folks have short tempers. They really have gone off on each other. If you want to see some of this stuff, you can go see stuff that Mark Zeller has said, stuff that the Morpho guys have said on Twitter to one another. It is not nice. They are just like, full knife to the throat, kind of really upset. And it seems like Mev Capital and Gauntlet kind of have gotten a lot of this ire directed towards them. This is the latest. So just to be clear, this is not Aave officially sanctioning Mev Capital and Gauntlet. This is ACI, which is kind of one of the major delegates. I think the biggest delegate of Aave, like kind of saying, we will not support any any proposal that comes up that is in any way favorable to Morpho, favorable to Mev Capital, favorable to Gauntlet. We will just vote it down, right? And like basically what they've said is like, it's okay for us to say that because we're supporting our interests in Aave. We are not Aave. We're just one of like the participants in Aave. Other people have said, you guys are the biggest delegate. If you guys want to push something through, there's like a good chance you can do it. So it's interesting dynamics. I think one of the biggest ways that this plays out, is with the different assets, right? Mev have like created a mellow LRT. I think we're pretty much guaranteed not to see that on Aave now. Gauntlet has recently launched their own vaults protocol. We're probably never going to see any of those assets on Aave as well. So, my kind of like ending thought on all this is they're building different things. Yes, they're both money markets. Yes, they're both ways we can get leverage on stuff, but they are geared in different ways. Generalized approach versus kind of a siloed approach. I use them and think about them very differently. And I think our space is a little bit too small to bicker and fight that fiercely. And we should just kind of all build together and realize that like there are different use cases for these things. I like Aave. I use it all the time, but I kind of reject this idea of just use Aave and that like slogan that they have. I think it's good for us to iterate and to try out new products and like give breath to other assets that might have, benefit from being on Morpho Blue and like growing through leverage that can be built on that side as well.
Yeah, you can't just use Aave because if you want to leverage up some more exotic assets, Aave doesn't let you do it. It's a very low risk, high security protocol, and that's phenomenal because that's what you want Aave to be. You want Aave to be a bunch of incredibly top tier collaterals with huge pools of lent liquidity, so you can go and like do your credit marketing in whatever way you want and strategizing without like any serious fear of exploit. But if you wanted to take, I can't think of any, like a governance token from a random protocol and borrow against that because you're like, maybe you're a founder, maybe you're a builder, maybe you got a huge airdrop and you don't want to sell it, but you want to realize some of the value of that, then you're going to have to go over to a place like Silo or like Morpho to collateralize that more exotic asset and borrow against it. So you're right. There are two totally different use cases. And I'm not going to say that bickering is bad because it does generate interest in the space. It does generate a little bit of hype, and maybe we'll see them in karate combat punching each other in the face soon. And so that's bullish for Gabriel Hines' commentary.
Yeah, it's great. And the interesting thing is like this siloed system is very similar to like Fraxland, right? So we have seen this done by Silo, the protocol, Fraxland, the protocol. I think the big difference with Morpho Blue is that they like have this system where you're not lending out directly. You have these, I think they're called curators, who are, accepting deposits of ETH, of stablecoins, and then, dispersing them to the different markets and kind of like doing some risk assessment that way.
Oh, I see.
And so that's one differentiation. You also, I think with Fraxland and Silo, it's the team themselves that are spinning up the vaults, whereas on Morpho Blue, it's the curator who's, basically like deciding on the parameters of the pair and like setting that up. So it is interesting, all these different iterations. I personally use, the like generalized Aave version more. Like that's where the majority of my like positions and leverage are. But for folks like yourself who love to dabble with like the PTs, for example, the Athena PTs have been a massively interesting kind of like loopable position with tons of liquidity for a really long time. So it does provide some really interesting use cases there.
Yeah.
Anyway, go ahead.
Okay, so there's one last thing I want to say about this, which is I know that Aave has been really close to EtherFi, and that like Renzo has wanted to have an Aave instance. I think they're gonna have an Aave instance. I know Kelp is having like an Aave. Kelp is going on Aave, or is on Aave proper, which is amazing. And I wonder, like, will these LRTs have to make this really hard decision, which is Morpho is huge and a great place to get liquidity, but Aave is the giant. It's the biggest place to get liquidity. It seems like ACI is going to say, if I use Morpho and I'm really friendly with them, I might not be able to get my asset, which is a massive asset. Renzo is the second largest LRT for ETH out there. I might not be allowed to get my asset listed on Aave. That's a tough position to be in.
Yeah, it is a tough position to be in. I think the solution is that like Lido is having their instance. I don't think everyone's having their own instance. I think that like there's going to be these other buckets. The same way that we see Aave on Scroll, we now have the Lido instance of Aave on mainnet. I believe that's where a lot of these other LRTs are going to be launched, right? So I think Easy ETH will be there. I also think PZ ETH, which is the Symbiotic LRT, will be there, as well as other like Mellow LRTs. That's because Symbiotic is so aligned with Lido, and I think hopefully it will be it'll be easier for them to get on that platform. That has actually been a pretty interesting place to get yield. I don't know if folks have been paying attention to this, but if you go to the Aave instance, like the Lido instance of Aave, I mean, they have been building up TVL. They've been like kind of getting some interesting loops going there.
I'm on Aave.
Yes.
Lido is on top, right? You typically
go to markets. And then click where it says Ethereum market. And then Lido right underneath it.
Oh, right.
So, they actually have doing pretty well. They've got $400 million of ETH that's been built up there. They've got, $384 million of wrap staked ETH. So, like this is it's actually a pretty interesting loop because they have higher LTVs. So you can actually have, I think it's
93.5. It's crazy high.
Yeah, super high. And they also have incentives. So if you go back and look at that, you're actually getting paid
another
to deposit your
wrap
staked ETH. Right. So it is both cheaper to borrow there. They have a more favorable kind of like curve on the interest rate. You're getting higher LTVs, and you're getting this bonus of what looks like 45 bips or something like that, 48 bips.
Yeah. So I was just looking at DeFi Llama, and they're showing a current APY of 3.18. So you got 45 bips. Let's just call it like 3.6. That's roughly a 1% arbitrage between the collateral yield and the debt. So then you take that, for those of you who follow me, you probably already know the math I'm going to do. You take that 1% arbitrage and you multiply that times whatever your leverage is. Now, at 93.5 of you are max leverage, that's probably somewhere around like 17x leverage. Could even be higher. I think 95 is 20x leverage, so probably around 17x leverage. So 17 additional percent on top of 3. It's really only 20%, but that's still really good. 20% on ETH just for leveraging it, and you're getting paid in, is it Lido tokens or wrap staked ETH?
It's wrap staked ETH.
It's more wrap staked ETH. So that's great. And there's plenty of, it looks like almost everything's borrowed. So the borrow has mostly been hit. Supply hasn't been hit. So do keep that in mind, I guess. You would have to be watching out for that.
But you're looking at wrap staked ETH, so you're not borrowing wrap staked ETH, you're collateralizing it, right? So there's plenty more space to supply.
Yeah. You're right.
Borrowing of the ETH. So you're arbitraging the difference between the 2.49% borrow cost and what did you just show there on DeFi?
Roughly 3.6. Yeah. So 1.1% times leverage.
Plus the additional 0.5% that you're getting for supplying wrap staked ETH. So
I was already building that in.
Oh, okay, cool. Yeah. So it's kind of like,
but let's look at the Oracle. Do you know what Oracle it uses?
Yeah, it's an Aave Oracle. It's exchange rate.
Let me see the description. Capped wrap staked ETH. Are you sure it's Nav Oracle? Because this looks like it's a market rate.
I'm pretty sure, but you looking at the contract probably have a better idea.
It looks like the wrap staked ETH. So the common oracles that we get from wrap staked ETH. It's a nav from wrap staked ETH to stETH. They use the exchange rate, but then from stETH to USD, it's based off of the market rate, and that seems to be what I'm looking at. But maybe I'm wrong. Get ratio. Okay, so current ratio is 1:1. I mean, we can go to like Lido and check this out. But anyways, what I would say is that always know your oracle. That is incredibly important to avoid liquidation. I myself was personally liquidated or partially liquidated on a wrap staked ETH position because I thought it was NAV or exchange rate, and it actually was market rate. And of course, a week later, that protocol switched from market rate to exchange rate, and I wouldn't have gotten liquidated. But that one lesson, that one huge chunk of tuition that I paid has made me hyper critical or hyper analytic of oracles ever since. So, I got my money's worth, I suppose, out of my tuition.
Yeah, yeah. No, very important to always be paying attention to oracles. I do think that like, an APR like this, which, does have a lot of liquidity attached to it and probably will be pretty consistent. This like say 20% APR on ETH
Right.
does kind of set a baseline. Especially when you're thinking about like the risk that you're taking on. If you can get 20% being on, Aave with Lido incentives, it is pretty competitive, and like, other yields on ETH have to be pretty big to kind of justify additional risk that you're taking on by going and using other like protocols and stuff.
Yeah,
What
and there
are
you
we
go.
saying
Look,
here?
it's on Contango. If you wanted to get a higher max leverage, you could manually do this in advanced, but if you just do it through Contango directly, then you can get that almost exactly 20%. So we were like spot on. Good for us. 20% APR
Yeah, it's great.
on ETH. Now,
The other
good.
The other, like thing to do on Aave obviously is to do EtherFi ETH. That might be like a slightly higher APR once you consider the Eigen, once you consider the EtherFi points, once you consider maybe, AVS airdrops, once you consider, all the different kind of upsides. It is also highly liquid. The big difference is that there's like, you have to kind of fight for space sometimes with EtherFi ETH. Like, for example, on Scroll, it's been filled for a long time. Aave on mainnet and Arbitrum, there have been more kind of, space opening up recently. Although I think as people have been seeing these programmatic rewards, which today's the day, by the way, we should be getting some programmatic rewards, which will be very exciting. That will be the rewards from August 15th to October 15th. So 2 months of programmatic rewards. I imagine that Aave is going to fill up again, right? I imagine that as people realize, oh, I can get 20+% on my my EtherFi ETH loop on Aave and these other places, these are going to kind of get capped out and get full.
What am I missing here? Because I'm seeing wrapped EtherFi ETH. I mean, am I looking at the wrong thing? Because this is
very looking small. At the wrong thing.
Okay.
This is the new EtherFi instance of Lido. So I don't think we've heard officially like what this can be for. My speculation is that this will be for their credit card, where you are depositing EtherFi ETH and then borrowing stablecoins and then spending those in the real world.
Yeah, hence PayPal USD.
You want to go look at the Ethereum market or the Arbitrum market on that list.
Right. Yeah, or the Scroll if you were super lucky.
Scroll market. Yeah.
Yeah, okay, right. So you're getting maybe another 2 bips on top of, let's just say 3%, so 3.2, you're borrowing at 2.7, so you are getting a positive yield. On top of that, you're getting all these additional EtherFi incentives, whether it be EtherFi points, which we've kind of been told, that that EtherFi points is not going to be just 14 bips. It might even be 1 to 2% additional APR on top of, the AVS yield, which we really don't know much about at all right now. And on top of the Eigen yield. Now, the Eigen yield, I have not done the calculation on that, but it's like 3% of their FDV going out to all of the TVL of Eigen. Have you estimated that's like a 1.5% yield, right? I think someone in the dojo said that.
Yeah, so I've been estimating it between 1 and 2%. It depends on the price of Eigen relative to ETH. There's like kind of some different factors there. But I think 1.5% is a pretty good estimate. I'm just, being a little bit more broad and saying between 1 and 2%. But if you start adding these things up and you say I'm getting between 1 and 2% in Eigen tokens, and I'm getting between 1 and 2% from EtherFi, either in the form of EtherFi tokens or other tokens, then you're starting, potentially to get into the 2 to 4% additional,
exactly. And that's
range.
Really meaningful when you're 10x leverage. That's 40% more APR.
Right. Right.
And
So
we should double tap, like, for people listening and rolling their eyes because they hate airdrops, you have to remember the Eigen incentives are not, it's not like an airdrop anymore. You're getting these things weekly. Is that right? Is it weekly or bi-weekly?
it's weekly,
It's
and
weekly. So
today's the
you're
first the
yeah, that
first
one to
time.
two
Yeah.
percent additional you can claim every single week. It's not like you have to wait 5 months for Eigen to decide what they want to drop to you. These things are going to be coming out on a weekly basis. And then the EtherFi Forever season, it actually is like officially season 4 now. It's not they're going to segment these things by 4-month basis. So trimesters, I guess. Those are going to go out every 4 months. So you know when it's going to end. You can kind of predict, kind of count on it. There is a lot more degree. We're getting more and more certainty out of these seasonal things.
Yeah. Yeah. I mean, this is my biggest exposure, right? Like I am aggressively in the EtherFi loops on Aave. I have exposure to this on mainnet. I have exposure to this on Arbitrum. I have exposure to this on Scroll. Scroll is crazy because like the airdrop snapshot is happening in 4 days, and so there's all sorts of wonky stuff happening, with like the borrow costs. Unfortunately, you can't get into this position. You can't go and deposit more EtherFi
Hyper
there.
competitive.
That being said, at 2.1% borrow cost, this is a very favorable loop. Just in real yield terms. So, there's a lot of opportunity to kind of get into this. I think it may also be capped on base. Because the yield is so high, you need to kind of paying attention to like where you can get in on these different ones. But it's available on base, it's available on Arbitrum, it's available on Scroll, and it's available on mainnet. And if you are diligent and you are paying attention, you can oftentimes squeeze in to one of those markets.
Yeah, and I mean, there is this chance, I think we talked about this before, that you might get some base airdrop in the future. So like, if you wanted to farm this specific loop, which is either leveraging wrapped staked ETH or wrapped EtherFi ETH on Aave against ETH and get like a real yield that is non-zero, it's positive, it's probably a little bit better than the native staking rate, and then also some potential airdrop. Base could be kind of fun. I want to quickly talk about Eigen. My Eigen bags are down. I kept all of my airdrop from Eigen, and like while ETH and BTC are pumping, well, first ETH and BTC were down and Eigen went up, and I thought, oh, that's fantastic. And then ETH and BTC pumped, and then Eigen went down. So for whatever reason that I can't understand, they seem to be somewhat inversely correlated. But talk to me about what you can do with your Eigen, because there's like 3 main things I'd say. You can either stake them liquidly with Renzo, stake them liquidly, that's a weird adjective, with EtherFi, or you can just chuck it into an operator.
Yeah. So, well, first of all, just as an update, I've been LP'd in Eigen for quite a while, and I think, that has been probably the highest yielding option. I'm still getting like almost 400% APR on my Eigen
How often
USDC.
are you rebalancing? Because I haven't rebalanced, and I'm down bad.
I haven't rebalanced once.
Man, maybe my range is way too tight then. I went out of range.
I have like just a pretty wide range, and like what keeps on happening is people are tighter than me, and so they keep on going out of range, and then I'll be the only liquidity, or not the only, but I'll be like the tight liquidity will be Steven will be out of range, and I'll be in range, and even though I'm like wider, I like am enjoying.
You're
a lot
getting
of
all the fees because that's where
Yeah, so that's one thing, but there's a ton of impermanent loss. Like, it is okay to say I've been getting all these high APRs, but if I tried to close my position, especially right now, I would eat a ton of impermanent loss.
Yeah,
so
but
like,
you'd still be up because you've made like what 25% in fees, and then you've maybe got like 10% in impermanent loss.
Right. So I mean, but like that's hard to do. If you wanna come talk to me and other kind of like folks who really think a lot about concentrated liquidity, come to the dojo. We can chat about it. It is complicated. It is hard. It is worthwhile if you want to learn it as a skill. It is a useful thing to learn. That being said, there are these non-impermanent loss options for an Eigen layer, which I think are very cool.
Well, actually, here's one interesting thing. I'm sorry for cutting you off. I noticed there's no liquidity for Eigen. Oh, and there is a little bit of liquidity for EZ Eigen, but I was thinking, why is no one spinning up a pool for Eigen on Uniswap at like 1% fee tier?
I think, I don't know. It's an opportunity. It's one of these like great arbitrage or like kind of, nascent asset opportunities that we talk about in the dojo all the time. But just to kind of like finish this thought, today's the day we're going to see the actual APR for what Eigen is earning, what EZ Eigen is earning for people that are just natively restaking their asset. And just to kind of run down the list of opportunities here, you can go and restake your Eigen natively. You can do that with the DeFi Dojo. We have our own operator, and we're diligently out there working to kind of get connected to different AVSs and to like, make sure that folks that are restaking with us are getting the, most favorable kind of benefits they can for engaging. The big downside is you don't get a liquid representation, right? So now you can go and you can restake your Eigen with Renzo or with EtherFi. I think up until now, we haven't seen a ton of differentiation in terms of like, is the actual Eigen APR that the two are earning going to be different? EtherFi had started off with like they were going to just distribute it through LRT squared, which is their kind of like, the new rewards system that they have attached to restaking on EigenLayer. Now I think they've changed it so it's going to actually be a value accrual or auto compounding token. So in terms of the actual uses of them, I think that they are the same, EtherFi and Renzo. But you need to start looking at like the details here in terms of points, right? If you're using Renzo, you're earning Renzo points. We had thought for a while that Renzo the current season they're in was going to be more favorable than the EtherFi one because I don't think we had all the details on it. But now we have more information, and from what I understand, if you're using the Eigen one, you're also earning LRT squared governance tokens. You're also earning EtherFi tokens. You're also earning Veda tokens. There's all these kind of interesting things that are going on. Do you want to break that down for us a little bit, Steven?
Yeah. So, it is a bit of a mess, but Eigen. So as you said, Eigen is going to be Eigen will be auto compounding all of the Eigen, which should be somewhere around 6.87% APR. So it's 1% of the FDV distributed linearly over a year, and so you can just quickly do the math on that. It ends up being around 6-7%. Then there's going to be Veda point. No way to guess these point valuations, by the way. Veda has billions of AUM, which is good for their potential valuation, so I like that. But we haven't heard an end date. We haven't heard a percent FDV airdrop. And we also haven't heard, I mean, maybe we have, but I haven't seen much in terms of use case for the Veda token. So maybe it will be a great airdrop. Maybe it won't be a meaningful additional percent. I'm just ballpark estimating it because there's so much TVL to incentivize with those points that it's going to be, a few bips, maybe 50 bips if you're lucky. If you're really lucky, maybe you'll get like a whole percentage additional on top of that, but I'm not assuming anything crazy or gigantic. For LRT squared, I am assuming an additional roughly 50 bips to 1%. And I've, done some basic math there, assuming, I think it was like a 200 million FDV and a 5% airdrop, or sorry, a 10% airdrop, I think they're, thinking about, and maybe a 4 to 5 month, quote unquote, first season. So with that, we're looking at around another 1%. So if you add that, if you add all those things together, you're looking at an Eigen potential APR of somewhere around 10%, which is good, but I'd like to see some more composability with Eigen. I'd like to borrow against it, because if you could borrow Eigen against it and loop it, obviously that gets really interesting. But who would lend their Eigen unless there was like a big institution when they could stake it and potentially get some of these AVS airdrops? That's one thing that I think is kind of really hard to calculate. We have, actually, if you guys haven't checked it out yet, the Eigen Explorer dashboard is kind of cool. We had a call with these guys recently, and they show you all the AVSs, and they show you like their potential APYs and like operators and stakers. They give you a lot of information. But all of these AVSs are potential airdrops you might get for staking your Eigen. And so I think that is one kind of incalculable bonus or benefit from having staked Eigen rather than just like purely, naked Eigen that's not doing anything. And hopefully that precipitates into something. We got a little bit burned by this with the TIA narrative. Initially, TIA airdrops were amazing and everyone was staking it for that narrative, and then they kind of died out a little bit. Maybe it's making a resurgence, I don't know. And so I wonder what the appetite for that will be for Eigen and these AVS airdrops.
Yeah, I'm excited. I'm excited for composability, for Eigen especially. I would love to maybe see, I don't know, Morpho pool where you can go and leverage it up like you were just saying, or providing liquidity and getting a boost that way. I did just realize, you were asking like how I'm getting a higher APR with my pool than yours. That's because I'm doing Eigen USDC, and I believe you're doing Eigen ETH.
Oh yeah, I'm doing Eigen ETH.
So there is way less liquidity for that. Also interesting, last time we talked, there was a new 30-bit pool that was spun up for Eigen with Eigen USDC. That's now gone. Whoever was LPing that pulled all the liquidity, and so it's still a 1% pool, and that's also the reason why the
You're about to get
APRs
so diluted.
We can edit this out. Don't worry.
That's right. Yeah. Well, we'll end there with that great opportunity. So if anyone listened, you get that. That's your gold nugget. You deserve that. A multi 100% APR on an Eigen USDC, 1% fee tier on Uniswap yield. So anyways, thank you guys so much for watching, for supporting. And of course, if you want to just literally talk to us, like in real time, all the time about yield and stuff, join the DeFi Dojo. We're in there. We're hanging out. We're talking. Like, we're accessible. So thank you guys so much for watching, and have a wonderful rest of your day.